The Equest Podcast, Funds Industry Conversations.
Hello podcast listeners and welcome to the Equest Podcast with me, Danny Lawler. If you're new to the Equest Podcast, do make sure to hit the subscribe button and the like button on your preferred podcast provider. For this episode, I'm joined by Tom Brennan of EisnerAmper, and we talk all things ICAAP. Now, not the sexiest topic in the world, but if you're somebody who has to lead the internal ICAAP project, it is a bit of a pain in the neck to try and get your head around what's involved and what's expected of you, because of all of the rules and rule books and guidance in the financial services world, when it comes to ICAAPs and how you put them together, it's actually pretty light in terms of rules and guidance. So that'd be really good to get Tom on board to give us some of his insights on how firms go about producing an ICAAP, the place that it plays in the risk framework, how the regulator views it, and also we chat about some of the good questions that directors should ask when it comes to review and approval of ICAAPs. So if you are in the ICAAP world, or likely to be in the ICAAP world pretty soon, this podcast is for you. Okay, on with the show.
The Equest Podcast, Funds Industry Conversations.
Hi, Tom. You're very welcome to the Equest Podcast.
Thank you, Danny, and thank you for inviting me. Looking forward
to it. It's great
to
to have you. Imagine it's December 2021 already. We've been through another year. It's just flown past.
I know. It's amazing, isn't it? I think the older you get, though, the faster the years go by.
Well, I thought that, but my kids actually said to me, and they're still pretty young, what a quick year it'd been. So I think when they're feeling it, it's a real time.
Yeah, it's really bad. I haven't heard that before.
It's not good. It's not good. But anyway, as we kind of start facing into working from home again, and as much as we were able to get back towards offices, and COVID coming around for, I don't know what wave number we're up to now. Is it 4?
I haven't been counting.
You give up counting, and Christmas parties are kind of on the long finger, and we're back to hoping that we get to see loved ones around the Christmas period. So with that, we're going to lighten the mood, Tom, by chatting ICAAPs.
Yes, all things about ICAAPs and their importance.
So I wondered how we could make an ICAAP podcast interesting. I wondered whether we should do it in rhyme, Tom. Your rap skills, or
you probably wouldn't use the word ICAAP. I think that's probably a good start. Internal Capital Adequacy Assessment Process. Though still a key part of any company's processes and procedures. But yeah, I'm not a poet, so I'll leave that to you to put in, Danny.
Well, let's see how we go. I think we won't inflict my singing on anyone.
Okay.
But ICAAPs they're certainly something that's crossing my desk an awful lot more than even a year or two ago, say. Simply, I think, by dint of the fact that certainly in my world anyway, where I tend to do a lot with, say, Mancos, that you do have more doing MiFID activities, and so they start to get dragged into having to do ICAAPs, and it's just something that we're seeing being more prevalent. And also, I guess, as businesses here have more their own presence, they're less dependent and less plugged into a group ICAAP maybe, or more conscious about having their own.
Yeah, I think we've probably done more work on ICAAPs this year than any previous year. I would agree. New authorization starting up is certainly a big part of it, and as you say, the MiFID top-ups bring people into that ICAAP as well. I'd say going to the future as well, we'll probably see more scrutiny of ICAAPs from the central bank as a result of the investment firm regulations and directive, making some minor changes, I would say, but still it's a chance for the CBI to kind of have a deeper look at an area that I haven't seen them always spend a lot of time on.
Yeah, I think you're right. I think over this next period, you'll just see a general increase in knowledge and understanding of what it is and what's expected of it. Because you can tell me, Tom, if this is your experience, but when you talk ICAAPs, you tend to get people saying yes, but shaking their head. It's something that's still a bit of a mystery, I think, to a lot of people.
I think so. It's interesting when you talk to clients from overseas and they start asking about ICAAP, what is this? We haven't kind of seen this in other countries. But when you do start to explain it to them, they kind of get it fairly quickly. And it's probably an area where you do see a lot less regulation in terms of guidance, I'd say, and even the regulations itself is pretty short. When you look at the CRD, it just says that your firms need sound, effective, and comprehensive strategies and process to assess and maintain internal capital they consider adequate to cover the risks that they are exposed to, which, okay, it doesn't flow off the tongue, but in summary, it's saying you must ensure you have enough capital to match the risks you're exposed to. And that hasn't changed with IFD, the new regulations. It's pretty much word for word the same, although there's probably a greater emphasis on liquidity. And also we'll see that probably more scope, smaller firms coming in, where even though there was an intention to give the exemptions to class 3 firms, I think the CBI are going to, they've indicated they're going to use their discretion to bring them in scope. So more people who were smaller firms who might have had limited exposure to ICAAPs will now be brought in.
Yeah, everybody's in, but you're right. So when it comes to ICAAP, your internal capital adequacy process and what it is, it's effectively another way for a regulated firm to take stock of the risks that they're exposed to and then try and quantify them and value them so that they, and then effectively put capital aside so that if they would come to pass, there's money in the pot to keep the business ticking over while the issue is addressed. So it's really another way of assessing your capital requirements and making sure that you've got enough capital set aside should you need it.
Yeah, exactly, Danny. And if you're probably a more mature and bigger company, you'll have a risk framework. You'll have a chief risk officer who will be doing all this and have a risk register with all those quantified anyway. And you can probably go and use your risk register and your existing risk framework to get an idea of how much capital you are exposed to. The ICAAP process, as the EBA kind of outlined it, is putting a structure around that to allow you to document your firm and your structures, as well as the risks, and adding in things like wind down plans and the effect that might have on capital requirements, and scenario testing as well. Obviously, really important part of it as well.
Yeah. So if you take a step back, you kind of think of the types of firms that are required to do an ICAAP. Certainly in the firms I engage with, MiFID firms do and have done. Fund management companies that have the MiFID top up are also caught by it. You'd have bigger organizations then as well, I guess, like credit institutions would do it. So it's something that affects quite a lot of firms, and they could be quite small firms, as you said. Now with the approach to an IFD, where there was an intention or an ability in the Investment Firms Directive regulation to exempt smaller firms from the requirement to do an ICAAP, the regulators decided not to do that. So everybody, even if they call them the class 3 firms, which are the smaller firms, they're also going to be required to do an ICAAP. So it's quite a broad church of firms that are caught by this requirement to produce the ICAAP.
Yeah, agreed. And you'll have those bigger credit institutions have a very sophisticated method, kind of an internal model that's been approved by the central bank. So they're probably fairly sophisticated in their approach and have been doing this for many years. The kind of class 2 firms that we see probably do it less frequently. Certainly you're required to do it annually. The central bank talks about doing it regularly, and that regularly we would recommend certainly semi-annual review, maybe even a recasting of it. And obviously as well, if there's a change in your business model or you're doing anything new, really, you should really consider the capital implications. And even discussing it at your board meetings is really helpful, even if you don't refresh it at every board meeting. But certainly anything you do that's going to change the risks you're exposed to could have ICAAP implications.
Yeah, and there's certainly a value in keeping it under review. But in terms of just wrapping up the scene setting, I guess for these firms that are caught, you tend to have a pillar 1 requirement, so your base capital requirement, which is usually just a bald number. Of your fund management company, it's a figure plus an assets under management. That's usually one. And then on top of that, then you have this ICAAP, the assessment that you perform yourself on your risks as you quantify them and come up with another number that is a capital requirement. And then you assess that against your pillar 1 with your fixed overheads requirement as well. And whichever is the bigger, guess what you're going to have. It's the bigger one. In terms of putting the ICAAP together, Tom, where do you see firms kind of, how do they go about writing and putting together an ICAAP?
Yeah, and if you're starting off, there's usually a bit of a bun fight between finance, risk and compliance. Who's actually in charge of the ICAAP and who starts doing it? if you look at it from a kind of a purely theoretical point of view and what the central bank expect, it's the board of directors who have ultimate responsibility, and they expect them to be responsible for it. In terms of where we'd normally see it, certainly compliance would have a strong part, but risk would be center of the wheel really in the actual ICAAP. The document itself, we would see it nearly as a handbook for the firm. It would be a description of your business as well as the risks. So it should be helpful. And where we see it as very useful, if there's a new director or director's induction and someone wants to find out about the firm, or someone from group is asking, tell us a bit more about what's happening in Ireland or wherever. The ICAAP should be a document that someone can read. It should be written in plain English, but explain, about the firm, what kind of business they're in, products, and then details of the risks that they're exposed to, and comprehensive scenario testing as well. But I think risk would be probably the key driver of it, really.
Yeah, and you're right. Risk, probably compliance and finance with the board of directors over it. So there's not many of the core functions in a business are going to escape the ICAAP process unscathed. They're all going to be. But overall, it's really important that the board own it, because that's where the director passes their gaze, isn't it?
Yes, and you raise a good point. If you look across the three lines of defence, certainly the business have a key part here, and they're linking in with risk anyway. So you'd expect the risk team to be meeting the business regularly, and you could consider doing a workshop with the business, as part of the ICAAP, which is something I've been involved in doing, where you meet each one of the business units and go down through the risk register and say, we're updating the ICAAP. Let's talk about your business. Let's review the risks, and let's consider what you think are the key risks.
And so you end up creating a document when you've done that. Like, you do need to spend time. You'll probably talk a bit about the regulatory requirements and environment. You'll talk about what it is that the business does, and then you discuss and you identify risks, and you try and quantify them. And when you put all that together, you actually do come up with a document that's quite valuable in terms of describing what the business is like on a day-to-day basis, more so maybe than even the program activities of the business plan, because they tend to be written in a bit of a vacuum before business is authorized, and they sometimes lag quite a bit behind what's actually happening in practice. So I find the ICAAP, I think if I were a newcomer to a business and you had a firm that had an ICAAP, that would be a better starting point to really get a handle on the business, because it's live. It does talk about risks. So you can see figures and assessments put in there to quantify. So I think it really brings a business to life and the challenges faced by that business to life. So it's a bit easier to get your head around what you're letting yourself in for.
Yeah, and that's exactly what the central bank expect. So when they come to visit and look at ICAAPs, one of the key points they're looking for is the integration of the ICAAP into the institution's management processes. And they can quickly gather how integrated it is or not. So by reading through it, and if those things we just talked about have happened, they'll all be reflected in the ICAAP. And the failure, if you don't integrate it and it's not well documented, they're marks that go against you in a CBI review.
Yeah, because the ICAAP process is kind of left to the firm for the most part. It's, as you said, the rules in it are not especially detailed. There is some guidance around it from SEBS we can chat about, but it's a fairly broad hand left to the firm to determine how they're going to approach it and what they will include. And if you make a bit of a hames of it, if it's easy enough to tell if it reflects the business or not, because if you look at the risks and they're not ones mentioned in the risk register, or you can't see a link between your risk register, say, and your ICAAP, immediately there's a falling down somewhere. And they said it kind of counts against you then if you're trying to convince the regulator that you got your ICAAP right.
Yeah, you're right. There is certain structures that they expect to see that each ICAAP will have, but at its heart there is a lot of art, as you say, in trying to develop it and what risks to put in. There's no formulas that you can use. It's literally making sure you identify all the risks and quantify them. So to a certain extent, the CBI do rely a lot on firms to do that. But also, there's a kind of commonality to firms that the CBI can use by looking at one risk register to another. And if you've got a small firm with no key man risks, the CBI would kind of spot that there's a gap here, and it kind of puts into question the whole thing. So it's certainly important that you cover all the risks, but you do have a lot of leeway in that.
Yeah, and you're kind of telling a story about your business. You're not that you're selling it, but you are describing what it is and what it does and what the risks are and how you have valued them properly. So if the regulator would look at an ICAAP and feel that you've missed something, or that it doesn't join up with the rest of the risk framework, or they don't find it credible, then that chance that you have to sell your business, to put your best foot forward, is kind of lost, and you're now in the back foot. So that if the regulator isn't convinced about it, then maybe they're not convinced by the number that you've come up with, and maybe they'll come up with something else for you that's certainly not going to be lower.
Yes, I've never seen any figures being lowered by the CBI. I'm not sure they'd actually be allowed to do that, because that it just wouldn't make a lot of sense. But you're bringing in a good point. The SREP, the supervisory process by which the regulator will come and review your ICAAP, and if you look at the way they approach that and the templates that you fill in as part of that, they're very detailed in terms of your business, your main product lines, your competitors, and how. So they'll gather a lot of information from you, which would allow them then to dig in and get an understanding of the business and have a fair guess at themselves of what the ICAAP should look like. So if it's deficient, you're probably going to be facing those kind of challenges and discussions with the regulator. And as you say, the outcome, we can talk about that later, but the outcome won't be something that you're probably wanting to do.
Yeah. And even where they don't do a SREP, which they wouldn't necessarily, I guess, for smaller firms, you do have to send your ICAAP every year to the regulator. It's accompanied by a covering kind of a notification or application form that has a number of fields that need to be completed. So it's a good idea to set out on your ICAAP to make sure that your ICAAP contains all of the questions you're going to be asked in a year's time when you're filing it, and that you're not kind of find that you've a gap or you're missing something, and then you're going to go and try and organize something around it, that you're ahead of all of that. So when filing time comes, it's very straightforward for you.
Yeah, agreed. Yeah.
And Tom, what's your impression of the role of advisors when it comes to the ICAAP preparation?
Yeah, I think certainly if we look at what's happened in the UK and with the FCA, I think the FCA have felt that advisors have got too involved in terms of the ICAAP, and it's become too generic. And certainly they've identified areas where firms have just got advisors literally to do the ICAAP for them. So I think that's a danger, and certainly be a poor practice if a firm just does that approach. So I think that's one thing to be aware of. However, I do think advisors can add a lot to an ICAAP. So if you have your own, well-developed ICAAP and process in place, certainly that's really good. And like anything, it's useful to have an outside party look at it. Your advisor probably will have seen lots of different ICAAPs, so they can bring that kind of best examples of what's going on in the market, and also your advisor can be so it's worth doing on a regular, maybe every few years, to get that kind of look. But the advisor also will kind of have a knowledge of what's going on in terms of any new regulations or any expectations around recent SREPs reviews that they've seen, because things change. Like if we think about ESG and sustainable investing, there's new rules coming down the road that will require MiFID firms to integrate that into pretty much all their processes. So getting an advisor to help can kind of get some useful IP around that.
Yeah, it's certainly useful to be in tune with the local environment, because I guess, Tom, we work with international groups, and you'll have an ICAAP at group level. Maybe now you need to have your Irish version of that, or a version that builds out from that and is sensitive to the Irish business. It's a very good idea to build into that what are the risks that your local regulator is particularly focused on. So it's here, outsourcing is something there's a lot of focus on, and also anything to do with cyber and the risks around IT and security are all ones that get a lot of attention. So it's worthwhile in your ICAAP to try and capture them. And likewise, you might have a type of business here that doesn't necessarily have the same features abroad. So if it's an Irish Manco, you'll have DPs and an organizational effectiveness director that you won't have in a French Manco or a UK Manco. And so it's good to pick that up. But whilst taking advice from your advisors, there's no substitute for the business owning it. And wouldn't take long, I think, for the regulator to suss out from an ICAAP if it was genuinely owned by the business or if it was prepared by an advisor for sign off.
Yeah, no, all your points are well made. And we've seen, particularly if you're coming to the EU for the first time and you have never really been involved in the ICAAP process, you probably will need an advisor to kind of get you pointed in the right direction. And it's those points you made about cyber and outsourcing exactly right as well. We've seen a lot of activity from the central bank in those areas. So they should be really a key part of the document and well described.
And so, Tom, then once you've identified your risks, how do you see firms go about quantifying and, taking that assessment into a number that they can stand over?
Yeah, again, it's not prescribed. So there's various levels of sophistication around this. If you're part of a group, you might have an approach that the group take, and certainly you should be allowed to follow that in Ireland. In terms of the approach to quantify things, there's certain level of practicality. So historic precedents are quite useful in terms of if you have a certain type of loss, you can go back and look through your risk register and your incident log to see what kind of matured in terms of a kind of quantifiable amount. So just following that approach, probably be a little bit conservative in that. So you're looking at the kind of gross loss in the first instance, and then you're reducing that by your mitigants. So if you were describing a typical loss, it's how did it happen, how did it occur, what's the worst way it could happen, and you pick a scenario, then you evaluate on a gross basis, and then you say, well, what mitigants have we in place for that? And it could be a good time as well to review those mitigants, and you can bring that down then by up to 75%. So that gives you a number, kind of net number. In addition to that, then there are in the UK, you're not allowed to use insurance to reduce it. Here, I've certainly seen in the past people using insurance to reduce that even further. But that gets you to your number.
And what about scenario testing then? Because it's something you see. It's an important part of kind of stressing the numbers that you have and trying to figure out, well, what would we do if?
Yeah, so that's kind of, you're on a separate basis then. So you've done your quantification of all your risks, and then the next thing is to go on to scenario testing to see if there's an alternative number that you could identify that might actually produce a different result. So scenario testings, a previous colleague of mine described that a lot of scenario testing he'd seen was more of a kerfuffle than an actual genuine attempt to look at kind of a real case of what could happen. So scenario testing, I think, I would say get it to be realistic. And, the two things you've just mentioned, Danny, like a cyber attack would be a good one to consider, or a failure of a key outsourcer. They're good examples. But you'll know yourselves what the potential ones. And the other piece of advice I'd have is just remember that any scenario that's going to happen is probably going to be a little bit worse than the previous one. So if you're, fund management company is a good example. We're looking at a possible downturn in AUM, so there's a kind of market crash, and if the previous downturn was 30%, it's probably not realistic putting in a 20% scenario downturn. You probably, it's going to be worse than what happened previously. It's probably a good way to look at it.
Yeah, I think from an outside assessor perspective, I think that's what you'd like to see, or you'd certainly find that more credible if the stresses are more serious rather than less serious. Once a firm has gone through that process, they've described their business, identified their risks, quantified them, done their scenario testing. What's the governance process around the ICAAPs? Like you do want to see your board being, not that they're drafting the thing, but they certainly want to be very involved in understanding how it's been put together and the approval process to it. Yeah,
and this is a really good question, and it's probably an area where if you were doing a Dear CEO letter and the CBI had reviewed ICAAPs, this would be one area that boards didn't get as involved as they should be. And going back to what I said earlier, that it's an integral part of the institution's management processes. So integral part means that the board need to be fully involved and challenge it, and that's got to be demonstratable. So what we do see is sometimes it's done through a kind of a risk committee that is brought through, and it could be a risk committee meeting involving the directors who attend and kind of are part of that process as it's been developed. There's nothing to stop the directors being part of the actual process in terms of like workshops and so on, and having even a directors workshop. But as a minimum, the board need to review the ICAAP and approve it. So that's the minimum. And what we do see is the central bank asking for minutes of those board meetings to show the discussion that happened at the board. So if the board, if you can't demonstrate that it was discussed and kind of challenged by the board, that could be an issue.
Yeah, I'd say board minutes are one of my top 3 questions I get asked most frequently around how to approach board minutes. But that's it. They really need to reflect the discussion. The document itself is there. You can take that as read in terms of how you describe it in minutes. It's, I guess, if you're an external reading the minutes, you want to get a sense for, was it waved through, or did people actually read the document and take time to talk through it and discuss and raise points and have those points addressed properly? And the minutes is the way to do that. It means maybe they're a bit longer than you might like, but it's important to capture that discussion in there. Tom, what's good questions from a director in relation to an ICAAP? What are the good questions a director should ask?
Yeah, and I think this is where we do see companies that do actually have that kind of challenge going on. And there's a back and forth, not just with the person preparing the ICAAP or presenting it, but also between the directors. And so often there's kind of disagreements. So I think, firstly, in terms of, is it comprehensive enough? I think is a good point that, has it covered everything? So if I was a director of a firm, I'd be looking at you'd read through the document. So it should be something that's easy to understand. Does it contain all the risks is probably a key question. So your knowledge of the business and what you've seen, do you think all the risks are properly captured? I think that's probably the key. And so go through this and go through the risks and discuss it. Secondly, the scenario testing, is it realistic? And does it kind of come in line with what you would think in terms of this type of business? So, and you might be, if you're a 9-8, you might have seen other businesses as well. You'd have that opportunity to kind of think about potential scenarios. I think a key point is really, does the firm have enough capital to protect it against the risk it's exposed to, which is what we said earlier about the legislation. So that's where you're coming from this. So when you look at the risks, the scenario testing, and we do see people do scenario tests and then they can do a combination of the scenario tests, 2 of them happening at the same time. So really, you're trying to challenge that figure that you have in your in the firm's capital. Is that enough to withstand the risks identified in the ICAAP? The other thing is, think about in terms of what we haven't talked about is a buffer, so above the regulatory requirement, because what you're doing is you're looking for the regulatory requirement of capital that you need to have to attain, as opposed to the capital you actually have, which should be higher. But I would suggest, if I was a director, I'd like to have a fairly high buffer that the board have agreed that the capital shouldn't fall below. And if it does fall below, then it triggers a debate about putting additional capital in or so on. So I think there are some key areas. Yeah.
Let me throw a couple in there. I think as a director, you want to maybe ask or be comfortable that the risk framework within the business and the risk register and appetite statement link up with your ICAAP, so that everything is consistent and that it is genuinely part of your overall risk framework and not something that an advisor has pulled out of a template and you're going to just do it for the sake of it. So that's certainly one. I think you're right on the buffer. Absolutely. You really do not want to breach your capital requirements. It is an enormous flag for the regulator if a firm does that, whether it's advertent or inadvertent. Even the simple, very easily explained breaches are a huge flag for the regulator. So really, you want to stay on the right side of your capital requirements and keep that buffer there. The other thing to remember, and I think what's a little bit different about the ICAAP process versus, for example, your Pillar 1, and if you're a management company, is that the ICAAP is forward-looking, isn't it? Like, if you think about your AUM and, your percentage of the AUM and your fixed amount, that's what we already have on our books. That is the amount that we already manage. Whereas the ICAAP is more forward-looking, thinking about these are the risks and we're trying to quantify them and we're scenario testing them. So you are kind of projecting forward more, I think, than with your regular Pillar 1. So it is worth bearing that in mind and asking about that. And I think lastly, then, and hopefully is obvious to businesses because they've been through it before. But where does the capital come from if it's required? If we do get close to the buffer, do we have a button that we can push to make sure that it's a very smooth process for the capital to be injected, and you get from that from the regulator? And if it's not, well, let's get that done, because it may need to happen at pretty short order. And as I said before, you don't want to trip up on breaching capital requirements. So plan in advance so that you can, as I said, you push that button and get the capital in quickly without any breach issues.
Yeah. Yes, they're really good points, all of them. And your point about it being a kind of forward-looking, your actual, obviously your capital shouldn't fall below your requirement. That's it's something that just can't happen really if you're a director. So you've got to make sure that doesn't happen. I think having outside the actual ICAAP itself, I think at board meetings I'd be asking for forecasts going forward of where your capital is forecast against your future profitability and so on. So that's usually really helpful. And I think as well, the board should probably consider getting training, maybe even annually on the ICAAP. Things do change. So I think that's one of the areas that boards really should look at. And going back to the advisors as well, I think you should refresh it every now and then and get advisors to come in and challenge it as opposed to prepare it. So you have a good point there. And then finally, you're right, in terms of the ICAAP being forward-looking, literally it's the figure of capital you're required to hold today at any time. And so any change to the business, if you're thinking of doing something new, you need to adjust it pretty quickly. So that's a really important point to remember.
Yeah, absolutely. It's, I guess, in the heat of battle as you're doing your day-to-day, and if it's whatever that new business line is, if it's a new service or if it's an acquisition, to just be mindful that is one of the knock-on effects, is what's it going to do to my ICAAP, and I need to go through a process and quantify that. So I guess to wrap up, Tom, maybe the last part of the process until you start the ICAAP again is filing with the central bank. So have you a sense for when it's received or how it's perceived by the central bank, or how they treat it or what they do when they receive it?
I think in terms of, it's one of those returns you can actually vary with your kind of it's not always set time the way a lot of returns are. So generally we see ICAAPs being done shortly around the time the financial statements are being prepared. So around April, May, after December year end, and they'll be filing it for June. So a June board meeting approving it really is kind of the timing. In terms of what the central bank are seeing, yeah, you're right. SREPs don't happen all the time, but it's probably one of we haven't seen a huge amount of challenge for clients that we've been dealing with. So it's not a big area. We have seen maybe the first year it's been done more challenge. So I think that's one point. But I would expect with IFR, IFD, and we've seen some changes coming through. One with liquidity. So the word liquidity is now much more prominent in the ICAAP, so you should consider that. And secondly, those smaller firms are going to come in. So I think with IFD, you may well see more focus by the central bank on ICAAPs going forward.
Yeah, I think that's right. I'd say you mentioned an important point there about smaller firms. Like, I mean, it is all subject to nature, scale, and complexity. So the smaller businesses, even though they're now dragged into this requirement to do an ICAAP, are not expected to do it to the same level of sophistication as, a very large credit institution or what have you. You may not have dedicated risk committees or functions that are solely responsible for ICAAPs. It's fair enough. You design it around something that's sensible for your own business. But I do, you're right that there's probably been of documents that get filed, I don't think the ICAAP is one that generates the most amount of questions at the moment. But the landscape here is shifting. You are seeing more businesses with a MiFID authorization, whether they're MiFID firms or whether they're management companies with the MiFID top-up. So it is something that's just more normal part of businesses. More businesses carrying out this activity. So you will find advisory firms, you'll find that individuals in the industry, and you'll find that the regulator all get more sophisticated and more knowledgeable about ICAAPs, and probably get, as they see more, have more peers, I guess, to review against, and it's easier then to identify outliers or things that look unusual because you've seen so many other ICAAPs. So I wouldn't be surprised if this starts to get more attention and more questions into the future than maybe it has done in the past.
Yeah, no, I would certainly agree, and which makes it even more important to do a good job first time around. The powers of the central bank in terms of deficient ICAAP are pretty strong, so they can ask you to hold additional capital or liquidity. They can ask you to improve your risk framework, your risk management framework, but they can also do things like ask you to restrict some business that you're doing. And the pretty strong powers that they have. It's probably not worth getting to that stage. So doing the work first is important.
It's definitely not worth getting to that stage. It's really one where you want to do a good job. You want to always be on the right side of capital requirements. With that in mind, there is, if you are a smaller institution, there is SEB's guidance, CBS SEB's guidance paper on ICAAP for smaller institutions that you will easily get through the central bank's website. Because I said there's not tons of rules or guidance or detail around how you go about putting it together, but that's a useful paper in terms of identifying risks that should be covered and what have you. So that's a useful guide for firms as they start out in an ICAAP process.
Yeah, and I think that's the Committee of European Banking Supervision. It's one of the only documents on the CBI website in relation to ICAAP, so a very important one. And you'll find that the SREPs and the kind of questionnaires that you fill in are linked to that as well. So for smaller firms, you should 100% be looking at that. And you're right, there's not a huge amount of guidance. The Irish MiFID Industry Association did a breakfast briefing back in 2018, and they've published their slides there, which are also very useful. So those two documents are ones we would give new clients to say, just read these before you get going.
Yeah, excellent. Have we missed anything, Tom? Have we covered the whole ICAAP landscape now to set people off on their Christmas break with to do for the new year?
I think that's probably enough, Danny. We've got into it in a lot of detail, so good job.
We have done. Well, listen, thank you very much, Tom, for joining me on the Quest podcast. Very grateful to have your input and insights into the ICAAP process. As I said, it's one where people's eyes glaze over a little bit, and there is a mystery around it that's maybe not quite deserved, and maybe now we've been able to lift some of that. So thanks very much, Tom.
Yeah. My pleasure. Thanks so much, Danny.
Great. And thank you, everybody, for listening to the Quest podcast. We'll catch you next time.
The Quest podcast, Funds Industry Conversations.